Aussies want the RBA to cut interest rates today, but that probably won't happen. There's a very fat chance of the RBA doing that, maybe even cutting interest rates not till September next year. Welcome to the Daily. My name is Jessica Remy. I'm a market strategist with Mumu. Well, markets are more focused on who will win the US election. They want certainty and the Fed to cut interest rates as expected later this week. But by this time tomorrow, we will probably know who has won the US election. But ahead of that, markets have continued to fall. The Nasdaq is now down 3% from its high last week. Nvidia briefly overtook Apple with a $3.4 trillion US market valuation at one point. But Nvidia shares are still down almost 6% from their record. Meanwhile, the S&P 500, that's continued to fall from its high. It's now down almost 3% as well, slipping ever so slightly overnight. So what's going on? Well, the polls are depicting a deadlock heated presidential race. Polls, they've been wrong before, we all know that, but traders don't know what to do. So they're taking profits off the table. They're taking money out of Trump trades. Bitcoin has continued to fall after hitting its second highest level in history last week. It, of course, didn't get over that hurdle that it needed to gain. It only hit 73,564 US. It was just $233 US away from that brand new record all-time high. But all in all, Bitcoin, as we said, it's down 8%. It's now buying $67,800. DJT Media shares, they rallied up 12.3% overnight, but that wasn't enough to erase that 35% plummet from last week, which we discussed on Friday. But there are some certainties in markets. Markets, we all know, love certainty. Gold is holding around brand new record all-time highs, and Fox Corp shares hit a new record all-time high overnight, jumping 9% ahead of Americans tuning into the election. News Corp shares also followed up in hot pursuit, rising only 0.5% though. In other news, the hottest sector of the year, uranium, it actually fell under pressure ahead of the US election. US uranium power giants have actually been stronger performers this year than chip stocks. That's a fun fact for you. However, Consol Energy shares tumbled, almost losing 13% overnight. Vistra Energy fell almost 4% overnight. Vistra is the top performing stock in the S&P 500. Other uranium stocks followed down as well. So what's going on? Well, the top energy regulator in the US unexpectedly rejected a power deal that another uranium company called Talon Energy had with Amazon. Now, this news basically acted as a catalyst for profits to come off the table ahead, of course, of the US election. As a result, the world's biggest uranium ETF, URA, that ETF fell almost 4%. Now, it seems probably due for another haircut before potentially recovering again, though the ETF is still up 32% from August, so traders do have some profits to perhaps take off the table. If you are interested in the uranium space, it is worth watching. Keep an eye on pullbacks. They don't typically last. After the dust settles, though, there could be some brilliant buying opportunities ahead in the carbon-free energy space because companies in this area do have deals with the world's biggest tech companies. For example, Consol Energy, they've been a standout this year. Their shares are up 92%, making them one of this year's best performers. But keep an eye on this. Consol Energy does have a 20-year agreement to sell power to Microsoft to, of course, power up Microsoft's data centers. Now, keep an eye on Consol Energy also because they reported better than expected financial results overnight. Their revenue jumped 7.2% to almost $7 billion US, far exceeding Wall Street's expectations. And wait for it, they also raised their earnings outlook for the year ahead. Now, normally, this would cause a stock to rally, but because of the US election action overnight, Consol Energy's shares have been on the nose. I guess investors were spooked by what happened to a competitor. But I do think Consol Energy is worth watching. You'll probably see some large investors buy the dip after maybe the US election. Down under today, the Aussie share market opened lower as expected. Focus, of course, on the RBA expected to hold interest rates as is at 2:30 p.m. Rates are expected to hold at 4.35%. Yes, they're at 13-year highs, and the RBA will probably signal that they see inflation rising again. Keep an eye on the Aussie dollar. The Fed is expected to cut interest rates later this week. but the RBA will probably keep rates high for longer. This basically means the Aussie dollar could rally back to almost 70 US cents over time and test those highs. Also consider the betting odds suggest that the RBA doesn't really have the capacity to cut rates until next year. So look for clues and language. If you are not watching the Melbourne Cup, keep an eye on the RBA's website and look for clues and possible hints of maybe a rate hike or the need to keep rates high for longer. I also think this means that you could see pressure on Aussie banks, bearing in mind that mortgages and credit card deals will probably be sought after, particularly those with NAB. NAB has got one of the most expensive home loan variable rates in the market, and I think NAB shares could come under pressure today. And that's the daily.